So the stock market is down, and down quite a bit. In fact, President Trump saying that he's not all that surprised by that it's kind of all happening according to plan. So the question is what exactly is the plan? Now we're having some people out there starting to speculate, and some of these theories are making a whole lot of sense. Perhaps President Trump is playing 3D chess, and we're all just catching up. We're going to talk about how this stock market crash may be very much part of the plan. And if so, what happens next? This is what everybody's out there talking about. What happens next? Well, I got some ideas for you, and I think that we're going to be seeing some changes in the near future. All right, friends, let's get into it. Welcome to the Poplar Report. I'm Steve Poplar. I'm an accountant by trade, and we're talking about things that the mainstream media just isn't talking about, and we're talking about some contrarian ideas and contrarian truths as we don't start with the assumption that President Trump just has no idea what he's doing. I think it's a good idea to start off with the assumption that he's surrounded with all of his advisors and a pretty smart business guy along the way might actually have a plan. President Trump in the past has shown himself to be very sensitive to what the stock market is doing. And then we have him come into this presidency, and suddenly he seems to be out there with a chainsaw to the stock market, and he's not flinching. I think it would be kind of odd if he was suddenly I didn't expect that to happen. That's crazy, but he's not. He's out there basically saying this was expected. He said short-term pain for long-term gain, that the stock market will come back up. So why did he declare economic war on the entire world all at once? We had the stock market out there calculating out, all the banks were sitting there with their little pens and paper, and they're trying to figure out what kind of tariffs President Trump was going to actually do. And they were out there saying, this is what we expect. President Trump could very well have looked over their shoulder, said, that's what you expect. I'm going to do exactly what you expect, except a little bit less, and the market would have gone up. Instead, he looked over their shoulder, saw what they were thinking, and said, no, I'm going to do way, way worse. Now, you may think, well, he needed to do this in order to get the effect that he's hoping for. And I think that's correct. But if his effect was he wanted to get individual countries to capitulate one at a time after the next, he would continue picking fights with them individually. But he didn't do that. He hit everybody all at once. And so I think it is safe for us to say, perhaps, and I think it's the case, part of his purpose was to crash the stock market. Now, 88% of the stock market belongs to the top 10%. Top 10% of Americans own 88% of all the stock in the U.S. So when you think about that, he's not just concerned about this top 10% who are mostly, government employees. Did I say that out loud? Anyway, the wealthiest 3 zip codes in the U.S. are all right around Washington, D.C. Is that perchance? I don't know. Anyway, so we have, if he brings the stock market down, who's it's going to affect? 88% of the effect is going to hit the top 10%. Washington, D.C. has been for so many years talking about let's hit the top 10%. Well, President Trump is going to generate lots of cash. It's a tax, okay? And it's going to affect the top 10%. I mean, you'd think Washington, D.C. would be like, you're finally doing what we've always promised to do. But we keep seeing that every time he does exactly what all these other politicians have promised to do, they freak out because they never intended to actually do those things. All right. This may not make you feel any better if you are suffering pain from the stock market crash. Whether your retirement account was exposed, Here's the deal, though. Why would he want to crash the stock market? Is it to keep the market down? No. He has shown that he wants the stock market to grow. He wants it to go up. He wants to use it as a sign of how good he is doing as a president to grow the economy. He's shown that time and time again. So he's doing something specific here. He wants the Federal Reserve to cut interest rates. So, stock market crashes, what happens? Banks, wealthy investors, they start shifting their money from stocks and they start shifting it over to treasury bills. They start loaning the federal government money. It's not the best idea in the world, but it's a safe haven. And it's basically kind of like cash. So you can sit in cash, but then you don't get any interest. Or you can be in treasuries, and it's basically like cash, but you get a little bit of money on the edge. Why does he want everybody to buy treasuries? Because it presses as treasury bills' value goes up, the interest rate goes down. And as the interest rate goes down, the Federal Reserve interest rates here, and we start seeing treasury bills interest rates go down, these are supposed to be the same. It shows that the Federal Reserve is losing control. And so the Federal Reserve, to kind of keep up the idea that the Federal Reserve controls interest rates, the Federal Reserve will cut interest rates down, and they'll basically start chasing the interest rate for treasuries. Now, the federal government has not been allowed to issue treasuries. It's been frozen. They're taking on all this extra debt, but they're not issuing treasury bills. They're not issuing savings bonds. So they have all this cash that's going to go out there and get priced at a certain interest rate. It's very advantageous to the federal government and to all of us if it gets priced at a low interest rate. He's pushing the price of interest rates down and trying to force the Federal Reserve to cut interest rates. Is it going to work? Well, if it's painful enough, yeah, it probably will. That will stimulate the U.S. economy, and it's going to make the government debt a lot more manageable. So that's a big deal. He can cut the deficit significantly if he can get that interest rate down. We're already spending more on interest than we are on defense. So if you can get the interest rate down, then we spend less money on defense. Less money on interest, and we'll save a whole bunch of money. Lots of billions and billions of dollars, right? And it brings mortgage rates down, which will benefit people like us, right? Normal people. It will bring credit card interest rates down. It will bring all the interest rates down, which will make it easier for us to invest in businesses, to get a car loan, all this stuff. Interest rates down will significantly help people like us. It will also stimulate the economy, which means more jobs. So tariffs up, bring interest rates down. That's a win. And it's going to bring manufacturing jobs back to the U.S. It's going to hit the top 10% hard, but people like you and me are going to see more jobs appear in the United States. It's starting to sound like it's a plan, and it's actually going according to plan so far. Now, we're going to have to see those manufacturing jobs reappear, but jobs were up last month significantly, a lot more than expected. And a lot of those jobs that were reappearing last month in February and March, we haven't actually got the March numbers yet, but February, we're seeing that these are manufacturing jobs coming back. Manufacturing jobs is exactly what he promised to bring back home. Now we're going to see this continue to work more and more, but what you can expect is the stock market may continue to go down. We may see interest rates continue to go down. This is, there may be more pain ahead. But once the pain is enough to get the Federal Reserve to respond, that may goose the markets back up, and President Trump can always take his foot off the gas pedal. He can always say, okay, we'll start cutting out exceptions for tariffs to China. Okay, we just made a deal with China. We're going to cut the tariff down by half. He can just, no one's going to complain. China's not going to complain if President Trump suddenly cuts the tariff in half. He can do that, boom, just because he feels like it. He can look at the stock market and go, it's too low today. I'm going to cut the tariff to China in half. Let's type that up on a piece of paper. I'm going to sign it. In fact, he doesn't even have to sign it. All he has to do is just have somebody in his staff leak it to the press that President Trump is going to cut the tariff rate for China in half tomorrow. It can be a rumor. It doesn't even have to happen. And the markets will go, yes, the trade war is over. Things are going to get back to normal. All the market needs is some hope. And right now, President Trump is not giving it to him because he needs the market to go down so that the interest rates will go down. Let me know what you guys think about that. But that brings me to the point of the question of what happens next. What happens next is I suspect the market's going to have to go down a little further because Jerome Powell has already said that he's not in a hurry to cut interest rates. Well, if the market goes down a little bit more, and a lot more, he's going to suddenly start cutting interest rates. One, because he needs to support the market. Why? Because the Federal Reserve has a lot of stocks on its balance sheet. Okay, they don't want to admit that, but they do. So we got that happening. This is going to stabilize banks. Why is it going to stabilize banks? Because banks are sitting there with large blocks of treasuries. As interest rates go down, the value of those treasury bills go back up. I was talking about how with interest rates high, banks are in serious trouble and have been in serious trouble because the value of their treasury bills went through the floor, their collateral, and they were sitting on trillions of dollars of unrealized losses. As interest rates come back down, value of those treasuries go back up, and they can get out of these positions that they have been trapped in, like bankruptcy type stuff, trapped, collapse of the banks. Interest rates coming down will allow these banks to get out of these awful situations they've put themselves in. And one of the banks that we're talking about there is the Federal Reserve, who has tons and tons of treasuries sitting on their balance sheets. Who has dumped treasuries? Who used to have a whole bunch of treasuries and then now doesn't have many at all? China. In fact, we've brought back most of those treasury bills back to the United States. We've had other countries selling those treasury bills and getting rid of those treasury bills when they've been very low in price. And now, if interest rates go down, those will become much more valuable. And the biggest beneficiaries of that, like I said, are going to be the banks inside the United States. By interest rates coming down, those banks will make a lot of money, or at least get back the money that they lost. So, we're talking about transferring a lot of money back into the United States, creating a lot of wealth by those interest rates coming down. It just means that the stock market's going to have to take a big punch in the face. But as President Trump said, in just a little bit, the stock market will come back up, and it will come back even stronger than where it was before. So, if you're invested in the stock market, hold on. Or if you need to get out to protect yourself, do what you got to do. But we're probably going to see the stock market, or at least some of the stocks. There's going to be some stocks that are going to benefit from the tariffs more than others. And we may very quickly see the end to tariffs once we start seeing the Federal Reserve start cutting interest rates. Because once that objective is completed, President Trump may want to stop the pain. He may start soft pedaling things. He may start leaking information or plans in order to start giving the market hope and help the stock market bottom out. So that's what I think. That's what a lot of folks are out there are starting to speculate, and that's what's going on here, that this is a strong arm move to move the Federal Reserve into doing what President Trump wants them to do. All right, friends, there's a lot of pain out there. You may be feeling the pain. If you're watching this video this long in, you probably are feeling some pain, I guess, and that's what you're kind of learning, wanting to hear opinions, contrarian opinions out there. Well, let me know what you guys think about that. Is that what President Trump is doing? And are we going to get the stock market back up above where it was? And I will put a caveat on there. Tech stocks are way overvalued. We may not see tech stocks get back up above where they were. We may see this as a permanent repricing of those tech stocks down. Some tech stocks are good and they generate a lot of money. Other tech stocks were way overvalued. But we have manufacturing companies inside the United States way undervalued. There's a lot of boring companies that have a lot of infrastructure, that have a lot of factories, a lot of overhead, a lot of workers, and these are non-sexy companies. They may benefit the most from the tariffs and the rebound in the U.S. economy. They may stop being unsexy and may suddenly start being sexy. We'll see. Let me know what you guys think down in the comments down below. Thanks so much for watching. If you want to check out another video from this channel, there's one right up here. I'll see you over there, or I'll see you guys later. Steve Poplar of the Poplar Report out.